Give us your first take on how Powell navigated that press conference.
So the press conference was going to be critically important because the communication challenge here was really something, right? Because here's a rate cut that people were really scratching their heads at. They were saying, what? Why now? And you see,
in fact, two members actually said no.
And actually,
no,
two members have dissented, which is, worthy of a discussion. But here you see Chairman Powell attempting to coalesce around a rationale, okay? And the rationale is what the Fed has been circling around, this idea of trade tensions, this idea of low global demand, and an idea that inflation is low. This is actually significant on the inflation front because, remember, it wasn't only just several press conferences ago where Jay Powell was saying inflation, transient. So what we've got here is a coalescence around some potential rationales. What we also have is some guidance. The guidance has come out. I would say not particularly helpful, right? What we've got here is a new statement in light of the implications of global developments for the economic outlook. Are we talking tariff war? Are we talking trade tensions? Are we talking weak manufacturing? Not a lot of specificity for markets or for the American economy.
David ZERVOS, your reaction?
So I think both Josh and Sarah actually hit two of the most important points on the head here. First, the inflation side. I think that's really where Jay led us before. He didn't lead us very well today on that, and I think that's a little why the market's reacting the way it is. It needed to hear more about this inflation undershoot, the framework change. He punted on that question. He could have done a much better job of saying, hey, we're doing this because we've missed inflation for so long by so much, and I think people would have got the gist of what he was doing. He didn't do that well. Hopefully he'll do that well the next time. He did that well in the semi-annual testimony. And I think Josh's point on the 95 comparison is really important. I think Clarida's in this camp, and most everybody else that's cutting here is in the camp that this is not the start of a recession and a major rate cutting cycle. It's a take back. Maybe we went a little too far. They never want to admit mistakes, but maybe we went a little too far and we're doing something.
December was too much.
Yeah, and I think that's an okay thing to say. He probably just could have articulated that a little bit better. But we've learned something from Jay in the last year or so of watching him. He's not the best articulator. He's not the best communicator. He makes some off-the-cuff remarks that don't work out so well sometimes. So I think the market is also going to give him a break on that. And they did. And we're back to kind of not down that much.